Hey, welcome to Talk Tickers. Today, we're digging into Zillow's latest earnings. And wow, is it a puzzle? You've got these fantastic revenue numbers on one side, but on the other, the stock just got absolutely hammered. So we're going to figure out exactly what spooked Wall Street and what this all means for Zillow going forward.
Okay, so here's the game plan. We'll start with that really weird disconnect between the results and how the market reacted. Then we'll get into the nitty-gritty of the numbers to see what's going on under the hood. From there, we'll figure out why the market sold off, look at Zillow's long-term strategy, and then we'll wrap it all up with our official rating in the next call.
All right, first up, the Q4 disconnect. You know, this quarter was a classic Wall Street head-scratcher. The headline numbers told one story, but the stock price, well, it told a completely different and frankly, much harsher one.
I mean, on the surface, everything looked great. Zillow comes out and posts an 18% jump in revenue compared to last year. That's a really impressive number that blew past what analysts were expecting, especially in this kind of environment.
But then this happens. The market's verdict was just brutal. The day after the earnings call, the stock tanks, down more than 17%. So what on earth is going on here? How do you connect those two things?
Let's dig into the numbers and see if we can find some answers. Because when you look closer, you see that while the quarter was solid overall, there were a few cracks under the surface that Wall Street just couldn't ignore.
And this table really tells the whole story. Look at that top-line revenue, a solid beat. And then check out the adjusted EBITDA, which is a key measure of profitability. Their margin expanded by 260 basis points. Now, to put that in perspective, that's a 2.6% improvement, which is a huge deal. But all of that great news got completely overshadowed by this tiny 1 penny miss on earnings per share. It just goes to show you how sensitive the market is right now.
And you want to know where the growth came from? It was all about the rentals business. I mean, revenue there just exploded, up an incredible 45% from last year. It now makes up more than a quarter of their entire business. That's a massive shift in where Zillow's money is coming from.
So here's the thing you got to remember. Investors weren't really trading on those Q4 results we just looked at. The market is always a forward-looking machine, right? It's all about what's coming next. So, what was it about the future that got everyone so worried? Well, it really boiled down to three key things that management said on the earnings call, and it was enough to spook the entire market. It was basically a perfect storm of caution. First, their guidance for next quarter was pretty weak. Second, they kept talking about how the challenging housing market wasn't going away anytime soon. And third, and this is a big one, they warned about rising legal expenses, which is probably tied to all the antitrust stuff happening in the real estate world. Put it all together, and it just creates a ton of uncertainty about their profits. And here it is. This is the smoking gun. Management actually put a number on the problem. They said, point blank, that these legal costs were going to hit their Q1 profit margins by 200 basis points. That's 2 full percentage points. That's a real, tangible, and honestly scary number for investors to latch onto. And that's what really sent the stock off a cliff.
Okay, but even with all this short-term noise, Zillow's management is sticking to their big picture plan. They're trying to build what they call the housing super app. The idea is pretty simple. They want to be the one-stop shop for everything you could ever need in real estate. From renting and buying to getting a mortgage and even moving. It's about owning that entire customer journey, not just the first search.
So what you've got here is a classic battle playing out. In one corner, you have these near-term headwinds, the legal costs, the tough housing market, but in the other corner, you have these really powerful long-term drivers, right? That rentals business is on fire, they're building out that super app, and they're backing it all up with a massive share buyback program. Okay, so what does this all mean for the stock? Where does it go from here? Let's put all these pieces together and make our official call on Zillow for the quarter ahead.
We're going to frame this in three parts. First, our prediction for the Q1 results. Second, what we think the stock price will do. And third, our final overall rating.
So here's what we think is going to happen. We expect Zillow's revenue growth to stay strong right in that mid-teens range. But nobody's going to care about that. All eyes are going to be on the profit margins and the impact from those legal costs. Is this a one-time thing or a new structural problem? This is shaping up to be a classic show-me quarter where management really has to prove themselves. And that brings us to our final rating, market perform. Look, the long-term growth story here is absolutely intact. That rentals business is incredible and the super app strategy makes a ton of sense, but that near-term uncertainty around the legal costs is just too big of a question mark right now to be more bullish.
And as always, this is not financial advice.